Yo guys, what's going on? Welcome back to another weekly forecast video. And I know you guys probably may tell that my voice is a bit croaky, so I'm going to keep this one short and get right to it. So as you can see, gold is currently obviously sort of correcting this sort of impulse move to the downside that we've had. But we've started to kind of move sideways. And the one thing I noticed is this kind of looks like a distribution sort of phase where, price is collecting liquidity from both sides at the moment. If I even put the box like this, you can see that we had a spike above here, had an impulse move to the downside, and then spiked below the wicks on the left here. And then this sent gold into an impulse move, an up thrust, which went and collected more stop losses from the top. So right now, we're just basically taking as many stop losses as we can, right? Spiking below, spiking above, not sort of moving in a impulsive phase up on the higher time frames, but definitely tedious to trade when it comes to your intraday trading, because you're never really getting some sort of like big move constantly. You're getting some sort of reversal here and there, so it's decent if you wanted to trade smaller time frame. But yeah, so anyway, currently gold's traveling in this sort of pattern. The one thing obviously I want to expect from this up thrust is I wanted to show this image that we've got down here. So this is a distribution sort of phase from Wyckoff. You guys can search this on Google and have a look at it. But obviously following this sort of pattern, what we're having is we've had an automatic reaction, which is AR, which is here from the BC, which is the buying climax. And then we've had a secondary retest. So this obviously retests the previous high. Then we fall down from there down to the sign of weakness in phase B. Now, phase B, again, this is a part of my strategy as well. I explain how to trade across Wyckoff as well. But phase B tends to be the area where a lot of stop losses happen, a lot of manipulation happens. So you can see that this sign of weakness, right? A lot of people would have thought that, yo, gold's going to start dropping from here, guys. Look, it's just falling, isn't it? But as soon as it took this wick around about 1830 and touched this level, instant bounce, right? Instant bounce, and just went towards the upside. We managed to catch, I think, a few pips off that move from the bottom. But now we've got to the up thrust, which is right here, right? What's the next pattern that it's doing? Price will slowly come back towards the sign of weakness, not break below it, just come back to retest. And this will either send price back up for a correction to then give the actual impulsive move down. Okay, so this is just all liquidity collection, guys. This is how I understand Wyckoff. It's a sort of phase which collects as much liquidity until the banks are ready to push the market, right? The market makers are ready to kind of move the market into that direction. So let's follow this sort of pattern on here now. So what I'll be expecting is for gold to sort of push down towards the 1830s. You could get it around about 1834. And then this should sort of give you a move back up towards 1860s again, where the NFP sort of move was. And then we should either get our sort of reaction for price to start moving towards the downside. And then this could give us, price to push all the way back down to at least back down to 1800s at least. But this is not the only schematic that you can get. You can get one of these ones, but you also can get one of these ones. Now I'll be looking out for both of these moves next week, right? The reason being is because on this one, you have something different. And this is the UTAD, which is the up thrust after distribution. So this is the final sort of stop hunt, right? It's the final sort of sweeper candle, spring, whatever, after you had already won. So, they can definitely mess you guys up. We've had sort of a stop there, and then this was a sort of liquidity collection that we have on the up thrust, but there's also one more that you could get. So a price could actually fall back down to 1830, same sort of thing. And then instead of price correcting halfway or correcting to at least like 70%, price will then push for another high, right? And this could be the final push, final correction to at least like 1880s, 1890s, or even 1900, sorry. And then this is where price could, slow itself down and then push back within the range and then start its way back down to the downside. So guys, there's two different scenarios I want you guys to look out for. Obviously, I'll be looking for bullish moves from around about 1830s area. I won't be expecting for price to push down at the moment, but again, things can change. So guys, take out all this with like a pinch of salt. and just, yeah, trade what you guys see. So I'll be following this sort of move. I'll update you guys even on the free channel as well, what I'll be seeing next week. And yeah, that's pretty much it. So I'll be expecting some sort of bearish move. Just a quick one. If we remove everything and jump onto the weekly candle, we can see that we've created some sort of doji here after a previous one. So we could potentially be getting some sort of move, some sort of bearish move, at least back down to 1820s or something, or we could get a full-blown reversal where price goes back below 1786. So guys, I love interesting things are happening on gold. Let's hope we can be on the right side of it. Okay, manage your risk, trade safe, and Elite Empire FX. Peace out.